And welcome back to YCharts 101. What we're going to be looking at today is using our new Quickflows tool and some of the single security Quickflows to essentially stress test either a model portfolio or an index or individual security during a different historical market event. And to get started here, I'm on my dashboard and I've set up a portfolio view within my dashboard. And what I want to start with today is this balanced model portfolio that I've created. So I'm going to click on the ticker here and it's going to bring me into the quote page for this balanced model. And over on the right-hand side of the quote page, you're going to find our new Quickflows tool. So I'm going to pop this open, and down here under economic impact, I have a variety of different options that are going to stress test this model portfolio during a different market event. So a great place to start is the real estate crisis. Folks love to use YCharts to kind of backtest the hypothetical performance of either an individual security or one of their models during the Great Recession, right? And what you'll see is with Quickflows, one click, and it takes me into another part of the tool, in this case, the fundamental charting tool, and it actually builds out the entire thing for me. I don't need to know anything about how to use this system. It's basically just setting up the groundwork so that I can analyze the results. So what we're looking at here is a chart from 2006 to 2011. You can see that custom time period in the upper right-hand corner, and it's showing me the investment of $10,000 in either my balanced model portfolio, the purple line here, or the S&P 500 total return index, that orange line that you're seeing there. Now below that, it's also showing me the Case-Shiller home price index. This is a great example of using the economic data that's available within YCharts to help you with your portfolio and security analysis. So it's showing me these two items over this custom time period. And it's showing me their performance in terms of the growth of $10,000. And you can see over here on the far left, that's that data format that's been selected. Now, a really similar view would just be the normalized percent change. This is a pretty standard way of looking at performance, trying to compare two things apples to apples. I can see here that my balanced model portfolio didn't draw down anywhere near as much as the S&P 500 did, and it actually outperformed it over this custom 4.5-year time period. One other data format that's really popular when you're looking at information like this, especially during a recessionary period or a period of heightened volatility, is going to be the percent off high data format. And this is going to actually show me from peak to trough, what were the drawdowns on these securities or this basket of securities over that time period. So now we're constantly bouncing off 0%, and that 0% is just the prior high of that investment. And it'll show you all the way down to the lows. In this case, my balance model was down about 31% at the worst period in 09. I'm going to also customize this chart. So the Quickflow tool is great for getting you started, but it's not locking you in place. You can still make it pretty dynamic from there. I want to see how my aggressive model portfolio held up in this time period too. So I'm going to add that to the chart, just using the search bar here under securities. Again, all of the search bars have predictive search, and I'm going to add my conservative model as well. And this will give me a good idea of whether or not the model portfolios that I'm creating are kind of checking the boxes, are doing the things that I would expect them to be doing in this type of environment. So now I can see that green line, my conservative model, held up pretty well during this time period, way less volatile than some of these other ones. Again, here's that balanced model in the middle. And my aggressive model, that blue line, did take on just about as much risk as the S&P 500, although nice to see that it was getting back to its prior highs a little bit quicker than that broad index was. So that's one stress testing Quickflow. If I go back to Quickflows here, you're going to see there's a ton of these economic impact Quickflows that you can use to evaluate this stuff. So I'm going to click into just a couple others so you can see some more examples. Another commonly used one recently, especially, is this coronavirus crisis, which we added kind of back in February. And what this one is doing is taking a look from the market high on February 20th up through today at my balanced model portfolio compared to some domestic equity indexes. You can see it's the S&P, the NASDAQ, and the Dow. If you want to, you could clean this up a little bit and maybe just chop it down so you're just looking at the S&P 500. And again, maybe you add a little bit of context here by looking for an aggressive model and a conservative model to make sure they were kind of holding up the ways that you would expect for your clients, right? So I can see my conservative model didn't draw down nearly as much. My balance kind of right there in the middle. And again, that aggressive allocation doing exactly what I would expect it to do. So those are all good signs. Last one I'll show you here, I'm going to go back into Quickflows, and why don't we take a look at an interest rate spike. And this is a good example of using these economic impact Quickflows, not only for a model portfolio, but maybe you're just using it when you're analyzing an individual fund or comparing a couple of funds. So I started this Quickflow using my balanced model portfolio, but I'm actually going to chop that out of here. Why don't we look at a couple different fixed income investments? I'll look at HYG here, and then we'll add a PIMCO fund too. So what this chart is now showing me is from a 4-month time period in 2013, which you can see in the date range window in the upper right-hand corner there. What was the performance showing the growth of $10,000 in 2 different investments I just chose, right? HYG and PIMCO income, compared to that purple line, which is the Barclays US aggregate, just a fixed income kind of broad basket index. And then below that, it's showing me the actual 10-year treasury rate. Again, great example of using econ data in YCharts because we have so much of it. You can visualize it historically. And it's showing me that consistent interest rate spike. And then it's also showing me kind of the impact of that spike on the investments here. Hopefully you found this iteration of YCharts 101 really useful. Thanks for your time.